Hey guys, Sean here. I've never invested in the Chinese markets before, not a single dollar, not one share of Alibaba or Tencent. I could never put my finger on it. I always felt uneasy, but now after recent events that unfolded, I finally realized why. You see, China has a bit of a transparency problem, and that is hindering its economic integration with the rest of the world. In other words, investors are quite nervous about putting their money in China. Now, a few months ago, we talked about the Chinese banks in Henan freezing their depositors' money, and now things have escalated into outright protests on the streets with people demanding their life savings back. But that's not all. Chinese home buyers across 80 cities are on a mortgage boycott, refusing to pay their monthly mortgage payments. Now, this comes after the Evergrande crisis, which poses the question if China's real estate market is on the verge of a collapse. After all, according to a combined research by IMF economists and a Harvard professor, real estate accounts for around 29% of China's GDP. And if China's second and third largest sector implodes, it could take down the rest of the economy, as well as investors all over the world really tied up in this mess. Now, the extent of mortgage exposure Chinese banks and financial institutions have is astounding. It's 46 trillion yuan or almost 7 trillion US dollars. That's almost double the annual GDP of Germany. Now, China has a fantastic economy that saw impressive double-digit growth for decades, which has lifted over 800 million people out of poverty. Now, China has a very unique blend of business that allows capitalism to thrive despite it being a socialist country. But it's this unique blend of state capitalism that is showing big cracks today, especially when you get the Chinese Communist Party really dictating how businesses should be run. Now, there's even an investment strategy that to make money investing in China, you should really just invest along the CCP. If the Chinese government favors a particular industry, you'll probably do well. Now, mixing politics with business is nothing new. We have seen the UK government slap a windfall tax on the oil and gas industry thanks to higher energy prices and inflation, and as a result, we saw oil stocks like BP and Shell crash. But China's intervention can be frightening and very last minute. It's like having your investment just get rug pulled at the last moment before you can claim victory, and that's something many conservative investors like me just can't stomach. Now, let's rewind back to 2020 and 2021 when China did a crackdown on their technology sector. They effectively torpedoed Ant Financial's IPO because Jack Ma said something stupid and he went missing from public view for a few months. And now it seems Beijing is now allowing the Ant IPO to go through after the crackdowns have cooled. And it's really this lack of transparency on what are the rules and the regulations that's making it really hard for China to come out ahead as a financial superpower and challenge the US head to head. And it's not ideal if you're trying to build investor confidence in your financial markets. And it seems depositors in China are also suffering from this lack of transparency in their local banks as well. Right now, depositors of 4 rural banks in China's Henan province had their funds frozen since April. We are talking about at least 3 months without access to your money. That's why we saw over 1,000 protesters outside one of the bank branches demanding their money back. Now, the scenes are really quite horrific and let's just say it escalated quite badly. Now, how did China react? Well, the banking and insurance regulator of the province told customers they will get their money back, but only just some of their money at first, and it's just a partial payout. Customers with deposits of up to 50,000 yuan or slightly over 7 grand US will be repaid, but everything else after that might just vanish into thin air. And this is an insanely low amount compared to the full 500,000 yuan deposit guarantee by the Chinese central bank. But if we dig under the surface, there seems to be quite a bit of suspicious activity discovered by Chinese regulators, and apparently there have been connections between the rural banks and a criminal group that was siphoning money out of the banks. But the story gets even murkier. It has been discovered that this rural bank scandal has a $300 billion tail risk that could surface if the economy starts to shrink. Apparently, this tier of high-risk lenders is loaning out money to small and medium businesses for a 0.39% return. They just don't make enough money on their loans, right? So just imagine if China's economy really experiences a slowdown. There could be more defaults down the road if depositors come knocking for their money. Now, this is bad enough. But the problem with China's transparency extends to their real estate market, which is even more horrific. Which brings us to the mortgage boycott issue. The scary thing is all these are interconnected. Just a few months ago, China encouraged their banks to loan more money to real estate developers and home buyers. So if real estate goes under, this could really cause a domino effect that might cause serious cracks in Chinese banks. Now, I don't know if it will be as bad as a Lehman Brothers moment, but it's definitely not a small issue. Now, first we gotta discuss why real estate is so highly valued in China. It's because of two big reasons. It is one of the few ways of growing wealth in China. As we mentioned earlier, local Chinese stocks are really volatile and it's still tough for locals to invest in the US stock markets thanks to capital controls. So they default to real estate instead. Plus, if you're a man in China and you want to get married, you better have a house first. Now, secondly, the CCP makes tons of money from this sector. The more developers are building homes, the more the government gets from land sales as well as real estate taxes. Now, homes are definitely getting overpriced and there are literally ghost cities popping up, but let's just focus on a mortgage boycott going on right now. So Chinese home buyers are refusing to pay their mortgage installments because they are sick and tired of Chinese developers selling homes before they are built. Now, basically, there is a run on confidence that the homes won't be built. They no longer trust the developers to be around long enough to finish up their homes. So if home buyers stop paying, it could lead to a collapse of developers. Now, banks who loan money to those developers might suffer from a default, and this will cause interest rates on mortgage loans to soar even higher, and we all know what that means. Property prices will start to come down, and with the property sector contributing more than a quarter to China's GDP, that is a deadly recipe for instant recession. But here's the thing, I wish I could give you more information, but according to Bloomberg, it seems China's mortgage boycott data has been erased by censors, so we are all in the dark about how severe this really is. But from what I can gather, we might be looking at over 46,000 home buyers refusing to pay their mortgages. Now that's a football stadium filled with pissed off people. And this brings us back to the topic of transparency that China lacks. You know, we love to highlight problems that America has, especially with their out-of-control money printing and obsession with green energy. But the United States, for all their faults, at least when it comes to capital markets, they are more transparent compared to China. And this is the big issue that many investors have about China. What is really going on under the hood? Is the only solution to invest in Chinese state-owned companies? Because here's the problem. If you invest in a company that has low state control, private companies like Alibaba, things can go swimmingly well until it doesn't, and then some new regulation could come out. Some say that the Ant Group IPO was cancelled because the government didn't want it to grow too powerful, while others believe that the shutdown happened because the company could add too much financial risk to the economy, and we don't really know. So things are really murky here. Now, investing in state-owned companies might be a solution. The top 4 most profitable companies in China are state-owned and they are all banks. But these banks are also caught up in the real estate crisis because they themselves lend money to the developers. In fact, China's biggest bank, ICBC, dropped by 2% after the news of the mortgage boycott happened. Now, according to regulators in China, there's around $312 million worth of loans at risk. And while that might seem like a small amount, we don't really know for sure if that is all. And if we also consider that China is making it difficult to audit Chinese firms listed in the United States, and the US really threatening to delist those companies, there's a real transparency challenge here that could lock China out of the global capital markets. And that is why, even though the United States is making so many fumbles, sanctioning countries, freezing national assets, and printing money like there's no tomorrow, China just can't pick up the ball and run with it, and that's a big problem. And this delaying China's push for a new reserve currency. We know that de-dollarization is happening. The US dollar's reserve status has been declining year after year to below 59% today. The BRICS countries are looking to create their own reserve currency, and we see India developing their own rupee system. So why hasn't the yuan replaced the dollar yet, or at least become a big contender to the greenback? And that's because China's probably managing their currency a little too much. You see, most currencies like the dollar, they have a floating exchange rate, and this allows it to find its true value. If people want your currency more or the supply decreases, the value goes up. If people want it less or you keep printing money, the value drops. But China has a fixed exchange rate policy, and that means the Chinese government and their state-owned banks will step in and buy and sell the yuan regularly to keep it within a trading range. Now, the People's Bank of China sets a midpoint for the currency, and the currency is only allowed to trade around a narrow band of plus minus 2%. Now, if it deviates too far, the central bank will just step in, right? And this makes it very hard for the world to ascertain the true value of the Chinese yuan. Is it supposed to be a lot stronger? Or maybe it's much weaker than we think? No one knows. There's no true price discovery. And that is why if China is really serious about the yuan becoming the new world reserve currency, they have to find a way to foster trust in it. It will be making a historic decision to float the currency, or they will have to back it up with valuable commodities like gold. But once again, this brings up the big question. Just how much gold does China have? You have to disclose it, right? We know that they are the biggest gold producers in the world, but officially, they have less than 2,000 tons of gold compared to America's 8,100 tons in reserve. So to make this clear, there has been no independent annual audits on either American or Chinese gold reserves, so both countries could be overstating or understating the amount of gold that they have. Now, if you want the yuan to be backed by a commodity, you also need to be transparent about how much of that commodity you have. In this case, is gold. So either way, the Chinese government will have to disclose more information to peg the yuan to gold, or really allow price discovery of the yuan on the open market, both of which still hasn't happened yet. And this is the big challenge that China is facing, a big transparency problem that is hindering its efforts to come out on top and win the financial game. Now, China's GDP has been rapidly increasing since 1990, but if you take a closer look, GDP per capita in 2021 was only around $12,500, almost 6 times lower than America's 70 grand. This means there is huge potential for the economy to grow if they get their act together. They have a bigger population, and I believe the people on the ground, they have the will to excel and make their lives better. But the way the financial system and capital markets are set up in China just makes it a real black box. It's like trying to fish in the dark. Will you get a bite and pull up a nice juicy catch, or will you be getting junk and trash instead? And that is why investors are very hesitant to put money into the Chinese markets. There are hurdles, there are capital controls, the currency is being controlled, and God knows what regulations are coming down the pipeline that could doom an entire industry. Just recall China's crackdown on education, banning any for-profit tutoring. That sent the shares of Chinese education companies crashing by 80 to 90%. Now that came out of left field and really wiped out investors. That is the ultimate curveball, and this is the big challenge China faces. It's not about how much commodities they have or how industrious their people are. It's about how transparent they can be. And it's this challenge that will make or break if they can become a financial powerhouse and challenge the US dollar for real. Now, the bank runs in China and the mortgage boycotts are just the symptoms of a bigger underlying problem, and hopefully they can solve this crisis and people can get their money back. So let me know what you think. Will this bank run and real estate crisis spread across the country? Will China one day get its act together and become more transparent? Let me know in the comments below. Stay safe, and if you enjoyed today's video, be sure to smash the like button and subscribe as we navigate through these crazy times. Thank you all for watching, and I'll see you soon.